Hello everyone, my name is Walmam Arif and today I will be presenting how can I invest 1 million US dollars internationally. So, the first one is the overview of my investment strategy. As we can see here, the aim of this investment plan is to create a strong, resilient and growth-oriented global portfolio. To guide this strategy, I follow three main principles. The first one is the diversification, which is to reduce country-specific risks by investing across different regions and asset classes. The second one is growth and stability, combining stable developed markets like Canada with fast-growing emerging markets such as South Africa and Nigeria. And the third one is sustainability and innovation, focusing on sectors that will shape future economic growth. Moving on to the next slide is my investment overview. As we can see here, I've chosen three countries. The first one is Canada. It will take 40% of my total investment, a high income, low risk country with stable financial markets. The second country that I've chosen is South Africa, which will take 35% of the allocation of 1 million. An upper middle income economy with strong opportunities in mining and renewable energy. And the last country that I've chosen is Nigeria, which will take 25% of my total 1 million investment. A lower middle income, high growth market driven by fintech and rapid urbanization. Moving on to the next one, I'll be explaining the first country that I've chosen, which is Canada. So for Canada, it will be allocated 400,000 US dollar. From that 400,000, 60% will be invested in technology. Canada is a global leader in AI, fintech, and digital innovation, especially in Toronto, Vancouver, and Montreal. And then from that 400,000, 40% will be invested in real estate. This is because it is supported by high immigration and limited housing supply. ERITS provides stable income and long-term value. This blend offers steady growth with moderate risk. Moving on to the next one is South Africa. So for South Africa, it will be allocated 350,000 US dollar. From that 350,000, 65% will be allocated into mining and precious metals sector. South Africa is a global leader in gold, platinum, and other critical mineral used in electronics and electric vehicles. The mining sector contributes significantly to national exports and benefits from rising commodity prices. And then 35% of the allocated 350,000 will go into renewable energy. This is because South Africa is a rapidly expanding solar, wind, and independent power projects. Investment in renewable energy is increasing as government opens the sector to private players. Moving on to the next country is Nigeria. Nigeria provides the highest growth potential in the portfolio. The main sectors are fintech, which will be allocated 70% of the allocated 250,000 US dollar. This is because Nigeria is Africa's fintech powerhouse, driven by a young population and strong mobile payment adoption. And then 30% will be allocated to real estate. With rapid urban growth and rising housing demands, real estate acts as both growth opportunity and inflation hedge. This allocation captures Nigeria fast expanding digital and urban economy. So as we can see here, the risk management, the strategies and the mitigating way. For Canada, the main risk that the country is facing, which is global economic volatility and interest rate changes. And how to mitigate is to invest in blue chip stocks, high quality bonds, and consistent rebalancing. So for South Africa, the risk that the country is facing is it is affected by political uncertainty, energy shortage, and currency volatility. The mitigation is diversify across mining and renewables, use currency hedging, and select companies with strong governance. For Nigeria, the risk that it is exposed, which is it is exposed to inflation, currency depreciation, and regulatory uncertainty. The mitigation for those risks are to provide USD denominated investments, choose strong fintech leaders, and focus on real estate in growth cities. So for the expected return from the portfolio are Canada 6 to 8%, South Africa 8 to 10%, and Nigeria 12 to 14%. This return reflect each country's economic maturity and risk profile. So moving on to the last one is the conclusion and summary. In conclusion, this global investment strategy creates a balanced and forward-looking approach to international investing. Canada gives the portfolio a stable foundation. South Africa brings strong medium-term growth from mining and renewable energy. Nigeria offers high growth opportunities in fintech and real estate. With diversified exposure and expected returns between 6% and 14%, this portfolio is designed to be resilient, future ready, and capable of generating sustainability long term wealth. That's all from me. Thank you.